Good morning, everyone. Welcome to Coffee with Carlson. Today is November the 2nd. Can you believe it? November already. Time is flying. Tomorrow's election day. If you haven't voted yet, there aren't too many people that haven't voted yet. But if you haven't and you're one of those, get out there and vote tomorrow. It's very important for everyone. I think the numbers were 60% already, Dan? Yeah, pretty crazy. I hope you're enjoying a wonderful cup of strangely warm coffee this morning, and thank you for joining us. So today, going to make another change to the show. The show went from a half an hour to 15 minutes. Now we're going to try and see if we can cover a more succinct topic for a shorter period of time. Because if you're anything like me, you've got an attention span of a fly at a picnic in the summertime. And that's very, 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 very short. So we figure if we get it around 5 minutes, cover one question that came up and try and build from there, maybe we'll be able to keep your attention, give you some valuable information, and keep you going to the next week. The other cool thing that we're working on right now is a new Facebook group. I've been trying to search Facebook for groups that allow small business owners to, or even managers of a smaller business or managers of a larger business, some sort of a forum to be able to ask and get some questions answered, not only from professionals, because certainly I'll be on there answering questions as much as I can, but also from their peers and what each other are dealing with on a regular basis. It doesn't have to be just here, but how does this person handle inventory? What pricing model does this company use? What phone system does that company use? Should I be buying more equipment before the end of the year? These are all kinds of topics that I think small business owners come up with all the time. And I haven't found one in our area, Heartland, but I really expanded that search a little bit to Orlando, Tampa markets. I couldn't really find one there either. And the big difference, I think right now, the small business groups that are out there are all marketing related, even the local ones. They're buy, sell, market your products. And I want to avoid all of that. So when we set up this group, hopefully it'll go live later this week, I'm going to control that so that there are no advertisements, no marketing of any sort. All I want it to be is a safe space for, I can't believe I just used that term. What I want it to be is
safe space. Did you just say that?
I sound like we're going to be opening a college campus. I'd like to have a place where small business owners can ask questions without being bombarded with marketing materials. I think there's a place for that, and certainly everyone has to market their business, including me. In this particular instance, I just want to help people out, and I couldn't find a forum for that, so I'm going to try and turn that on. We're playing with it behind the scenes right now, but hopefully we'll have it live within a week. So today's topic on Coffee with Carlson is a question that comes up. We're getting toward the year end. We've been talking about that the last few weeks. Today I'm going to talk a little bit about itemized deductions and how that plays in with year end. And next week we'll continue to talk about the year end, maybe with a little bit more business focus versus personal focus. So year-end planning and how that relates to itemized deductions, or how it relates to a rental property that you have or a small business that you have, in regard to paying things like property taxes prior to the year end. And there's a little bit of a planning strategy there. Individual taxpayers are cash basis taxpayers. That means that you pay income tax on the cash money you earned and collected in that period. And you expense or deduct the money that you paid out during that period and was actually paid to someone. So in this scenario, say you're looking at your home where you live, you get a property tax bill last year in 2019. You get it on around November the 1st, right? It's due November. That property tax bill doesn't have to be paid, or it isn't delinquent until March 31st of 2020. So there's a little bit of a strategy to come into play. If you have income, say you didn't really have a tenant in 2019, so you didn't need the expense to write off against a piece of rental property. So you held that bill until January and paid it in January of this year. This year, 2020, you've had your property rented the entire time, so you want to try and get as many deductions as you can. You can go ahead and pay that tax bill because it's due now. So you can get that covered before the end of the year, and you're kind of doubling up on the expense. Same thing sometimes with your property tax bills. If you're financing that, for instance, and you want to accelerate, it's already due, it's already payable, you could go ahead and pay it off instead of carrying it out. You save yourself a little bit of interest, and you could carry it carry the expense in this year versus next year. You could do the same thing with your homesteaded property. So, we talked a little bit about the standard deduction and how those limits have increased dramatically in the current tax bill, so that a lot of people can't itemize anymore. But maybe if you have your property taxes in that same scenario, you pay it in January and you pay it in November or December, then you pay twice in 1 year. It might get you over the limit. It's only a marginal increase, a marginal savings in taxes, but you would get nothing if you did it the normal way. The same as if you were thinking about for your home, you can't deduct anything other than your property taxes, but you might have a vacation property that you can deduct. So you think about that as well. Maybe you can move those into the same year, double up your deduction on them. And some people just don't pay it at the end of the year because the cash flow is bad. I know in my business, the worst period for cash flow is November to January, just because people are going on holidays, things are slowing down, versus a business like retail where you hope for lots of Christmas sales. Their main business happens in November to January. There's a lot of business there. So you have to gauge it the way you can. Look at your cash flow. Make sure that you have the funds available to cover the periods that you're going to need to in the future. But helpful tip, might be able to help get you a little bit extra deduction. And if you have any further questions on that, please put a comment or question in this at the bottom of this thread now. Check us out on YouTube where this video will be, and you can make comments, like, share, hit the bell. And also, if you need an appointment, you want to come in and sit down about these things because you have a rental property and you're concerned about it, you could check us out at carlsonaccounting.com. You can book an appointment with me right on the webpage. And otherwise, give us a call, 863-382-4141. Thank you once again for joining me with Coffee with Carlson. I hope you liked this shorter version where we covered one single question to try and help you, things that are relevant for you when it comes to taxes and running your small business. Thank you very much. Have a beautiful morning, and God bless.